Hello, good day to you. Welcome to my YouTube channel. My name is Michelle and this is Crypto with Mishi. Alright, today's video is going to be centering on 8 important rules for successful trades. And I'll also, at the end of this video, be showing you powerful trading strategies and methods I found very useful and highly profitable for those who are interested in becoming a profitable trader. All right, so without further ado, let's jump right in. All right, now we have some things that people found themselves doing and that caused them to blow their accounts. That usually blows their account, and when I say blow their account, I mean they lose all their money. All right, every single trader have blown their money to some extent before realizing what they are supposed to be doing. No one starting out new have will say that he or she have not lost money, serious money in trading. All right, as a beginner. So I will be giving out these rules that I found very effective and helpful in guiding you to becoming a successful trader. Even if you have lost money in the past, but these rules is going to guide you from now on to trade better and manage your money better. All right, so the first rule is risk management. You manage your risk, and how do you manage your risk? You may ask. You manage your risks. Let's say, for example, you have $100 as your trading capital, the total amount you have in your wallet, be it ETF, be it spot, be it futures trading. If you have $100, you don't just jump right into a trade with the whole $100 or divide it into two and jump into the trade with 50% of it. That will end up making you to lose your funds. All right, so what do you do? Instead of doing that, you use between 5 to 10% of your money to trade a particular coin or to enter a particular trade. All right, let's say for example you want to trade BTC against USDT with that with your capital of $100. You don't just invest in the whole market with $100. You do what is called dollar cost averaging, and that is the aspect of you dividing your money to certain percentage. You can divide it into four, you can divide it into eight, or divide it into 10. All right. If you are dividing it into 10, that means you are using 10% of your capital, and 10% of $100 is what? $10. So you enter your first buying position with $10. If the coin dips to certain percentage, let's say 5% or 10%, it dips. If you are trading spot or whichever one you are trading ETF, if it dips, you buy more. All right, so that will give you a better position to make more profit at a little price appreciation in your direction. That's say if BTC you bought BTC for the first time with the first 10% with at the price of 23,000. If it dips a little to around 22,000, you can buy more with your $10, another $10. Then if it dips again to let's say 21,500, you can decide to buy more with another $10. There's no how BTC will dip straightforward to $21,000 without recovering. So if you dip to 21,000 and you see an opportunity to buy again, you buy with another $10. That will make it, you bought at 23,000, you bought at 22,000, you bought at 21,500, you bought again at 21,000. That's four buying slots, and that means you have only spent 40% of your $100, which is $40. So If eventually prices appreciate, let's say it recovers back to 21,500 or 22,000 dollars, you make profit because of your dollar cost averaging. And how this dollar cost averaging works is this: the number of times you bought at that price you bought, you divide it by how many times you bought. Let's say, for example, you bought at 23,000 and you bought again at 22,000. You add 23,000 plus 22,000, that will be 45,000. Then you bought again at 21,500. You add it to the 45,000, that will be 66,500. You later bought at 21,000 again. You add it up to 66,500, that will be 87,500. The four different prices you bought at, you add them up. All right, you add them up, then you now divide it by 4, which is the number of times you bought. You divide it by 4, that means you divide it 7,500, which is the total sum of the different prices you bought, divided by 4. It will give you your average buying position. If you do so, your average buying position will be 21,875. So if eventually, okay, let's say you bought this with you bought the average buying position is 21,875, and you bought it with $40, 21,875. That will be giving you 0.00182 pieces of Bitcoin. Now, if you times it by 22,000, remember the average buying position is 21,875 and the price goes to 22,500, for example. So you multiply that number of BTC 0.00182 by 22,500. Let's say it recovers to 22,500 before dipping again. You'll be in profit of what? $41.14. All right, you've been in profit of $41.14. And now this is for those that are doing spot. If you are doing futures or doing ETF, your leverage will be higher. Okay, that profit of $1.14. If you are using 2x leverage or 3x leverage on ETF, that will be around $3. If you are using 20x leverage, that will be $20. All right, that's for futures. If you're using 20x leverage on futures or 10x leverage on futures, that will be $10 with such amount, with such a few margins. All right, and that is how a dollar cost averaging works. And as well, that is how you manage your risk. Now, another important rule for you to have in mind is you should not be greedy. You should not be greedy. You should not be greedy. You should be able to take your profit on time as soon as possible. All right. Take your profit as soon as possible. Once you set a reasonable target, take that profit. All right. You can decide to sell 90% of your slot and leave 10%, as long as the remaining 10% of the assets you have. Let's say you bought Bitcoin, or let's say another coin that is $1. Let's say SRP or Cardano is at $1. You bought $40 worth of Cardano, and you see profit of 45. You see profit of $5. So instead of you selling the whole $45, you can decide to sell 90% of it, and make sure while selling that the 90% or the remaining 10% is up to $10 or more than $10. At least minimum of $11 should be left, so that if eventually the price continue going up, you can be able to make more profit from there. But if eventually the price starts going up and you see it on time, at least by the time you'll be in loss, you still be left with about $10 and some cents, which will allow you to sell on your exchange. Like Binance, for example, the minimum transaction you can make, be it buying or selling, is $10. So that will help you to be able to sell. But to be on the better safe side, take your profits, leave the market, and focus on other things that you do in life. Okay, that will even help to reduce your risk of making mistakes. Because over trading can cause a lot of harm. If you overtrade, it will cause a lot of harm. I will still talk about that in this video. So the third rule, before we jump to the third rule, I will also want to remind you to please like the video if you are seeing positive impacts from the video. If you're getting good results from the video, please like the video and subscribe to my YouTube channel. This will help the YouTube algorithm to make this video available to more people. You can share with your friends too who might be needing this kind of information. So please don't forget to like and share, then subscribe to my YouTube video. It will really help YouTube algorithm to bring this video forth to the other users of YouTube channel like mine. All right. So the number three is this: identify your trading time zone. This is very important. Identify your trading time zone. And what do I mean by trading time zone? Like you should be able or must have heard of London time, New York time, Tokyo time, and the rest. All right. You need to know the time zone that works best for you. Okay. When it comes to the London trading time or time zone starts by 6 a.m. between 6 a.m. to 8 a.m. and ends between 4 p.m. to 5 p.m. That is for London time. Between 6 a.m. to 8 a.m., that's the starting time, and it ends around 4 p.m. to 5 p.m. Okay. Now the New York time starts by 1 p.m. New York time starts by 1 p.m. and ends by 9 p.m. Alright, it starts by 1 p.m. and ends 9 p.m. That is for New York trading time. Alright, then for Tokyo, it starts from 1 a.m. and ends by 9 a.m. From 1 a.m. to 9 a.m. Then, out of these three I've mentioned, the one I found interesting and effective more is the Tokyo trading session, the Tokyo time, 1 a.m. to 9 a.m. in the morning. This is the more effective because it happens to be the time that many people have the time to trade. For us here in Nigeria, if after going to work, you come back from work, you sleep. At least when you come back to work, let's say around 8, 9, you go to bed. This 10 o'clock, you're already on bed. You sleep 10, 11, 12, 1. At least 3 hours. Study the markets by 1. You woke up by 1. Study the markets, engage. It's more faster to make profit to hit your target by this time frame. This is what I have observed. All right, and then it's very effective. All right, so Tokyo is my best out of these time zones. Tokyo time is my best. It's my favorite. 1 a.m. to 9 a.m. All right, that is where more volume comes in because more people are available to trade between these times. All right. So now, what about the fourth rule? Another rule that you should also have in mind is to select the coins you trade. Don't just trade anyhow coins. You need to select the coins you trade. In fact, for those of us trading ETF on Binance, those of us trading ETF on Binance, you find out that the coins have been selected for you. It's not all coins that are on ETF. It's top performing coins that have been selected on the Binance. So you can use that to do your trades. Then for those on futures, you can also look around, you know, find out move, coins that move quickly, coins that have volume. You can use CoinGecko or CoinMarketCap to check the top 10 coins, or top 10 or top 5 coins. At least have two coins that you are trading. All right, if you can maintain two coins that you trade, it will help you a lot because you'll be able to study them very well and then know how the market behaves. All right, how their market behaves is going to help you than trading 50 coins or 20 coins that you don't even know how their movement is. All right, so this is going to help you as well to make a good trade decisions. Now, the fifth one is to maintain a working strategy at all time. Always maintain a working strategy. If you have a strategy that you are using for your trades, please maintain it as long as it is working for you, as long as it's giving you 60% or 50% win rate. That means you're making 50%. You're successful in 50% of your trade, which means if you trade 100 times, you win 50 trades. That is awesome because remember, at all time, you are using either 1.5 risk to reward ratio or 2 to 1 risk to reward ratio. 1.5 to 1 risk to reward ratio or 2 to 1 risk reward ratio. What that means is this: if your risk reward ratio is 1, then your profit target is 1.5, which means you are making 50.50 additional profits. All right, you are making almost times 2 your risk. So if you lose and you win the next trade, 1.5 will cover half of your, the one have already covered your loss, and the 5.5 is going to be your profit. If you're using 2.1, 2 to 1, that means if you lose one, you trade the next one and you win, which is you did 2. Half of that 2, which is 1, will cover the one loss you incurred previously on your trade. Then the remaining one will also be your profit. So at all time, you see that you always be in profit. If your if your risk or stop loss is at 1%, then your reward will be at 2%. So if you lose 1%, you gain 2%. You always be in profit. So if you have lost 50% of your 100 trades and won 50% of your 100 trades, that is very good. That is very good because if you're losing 1% by times 50 trades, that means you have lost 50% of you lost 50% of your capital that you used to trade that time, for example, and you won 50% of that trade as well. Now 50, that means 50 times 50 trades times 2%, which is 100, which is 100%. So if you subtract the lost 50% from 100%, you still have 50% profit. So if you are starting with $100, you'll be having like $50 at the end of the 100 trade. additionally to your $100. So total will be 150. So it is very good if you're making 50% profit or 50% win rates on your trades. So if you have a strategy that works for you, if you have a strategy that works for you that you have been using and you're making a successful trade at a 50% win rate, go ahead and maintain it. Don't just jump right into another strategy just because you find it interesting. No, no. It's true that sometimes updates are being made available to some certain trading strategies, but backtest them first and see if it is better than the one you are using before, and if you can be able to use it. Not all strategies works for every trader, so know if you can use it or if it's better than the previous one. If it is better, of course, everybody in the right senses will always like to use a better strategy, but make sure that before you start using it, you have confirmed, you have backtested it. That means you have used it on the previous candlestick charts to see if it works. All right, if it works. So I will still show you what I mean by backtesting, just like I will be doing by the end of this video. All right, then you mustn't trade every day, and even if you do, don't overtrade. This is a very big mistake that many traders make. This is a very wrong mindset that you must trade every day. Every day you wake up, you think that if you don't trade, that means you have lost huge. No. Sometimes the day you don't trade is the day that you saved yourself a lot of disaster. All right. So don't trade every day. Don't you mustn't trade every day. If you don't feel like trading for that day, leave it. Don't force it. Once you start forcing trades on yourself, you find out you end up losing a lot. So don't force trades. If there's no open opportunity for you to trade, do not force it. If you are always trading on 15 minutes or 30 minutes or 1 hour candlestick chart and you do not see any buying or selling signal on these three time frames that you trade on, do not go and say, let me try out 10 minutes or 5 minutes to see if I can get a signal, or let me try 4 hours to see if I can get a signal. No, don't do that. That will end up leading you into loss because you have not used those time frames before. All right, so maintain that time frame. You mustn't trade every day. Wait for the opportunity to come up, and once it does, then you go ahead and engage. If it doesn't, leave it for the day. And if you see an opportunity and you engage, do not engage again in that same opportunity if you have already taken your profit. All right, you can either follow the trend continuously until you find a better position to take profit. Once you take that profit, do not engage again immediately. Just take a break, think about what made you win that trade. All right, what made you win that trade? Okay, then if you eventually you want to enter again after seeing another opportunity, think about it very well. Do the same analysis you did that made you win the previous trade. It's true that not all the time you win on trades. No strategy, no indicator is 100% accurate or 100% perfect, because what you are trying to do is to analyze what is going to happen in the future, and no one can predict what will happen in the future. You can only try to analyze it the best possible way, but it is not 100% accurate. All right, so you have that in mind. So don't overtrade, don't jump into trades anyhow. Analyze your chart, use your strategies at every single trade, okay, before you engage. Make sure you have every rules for your trading showing, displaying on the chart before you engage. I'll still talk on this more when I start showing you what I have for you in the last part of this video. All right, so also use a small lot size. Like I mentioned, If you have $100, do not use everything at once. You can start with 10% of $100, which is $10, or you can start with 5%, which is $5, to be on the safer side. Okay, so it is better to make small, consistent profits than making huge, consistent profit, huge, consistent loss. It's better to make small, consistent profits than to make huge, consistent losses. All right, have that in mind. Use a small lot size, then have a trade journal. This is highly important. This is highly recommended. Have a trade journal. The trade journal can be a normal journal. You buy a new journal where you write down some things, you draw a line. The day you win your trade, you write the date, write the coin you traded and against what pair. If it is BTC, USDT, you write it down. You write down the time you traded for that day. You write down the amount you used for the trade. You write down how many percent profit you made. All right. If you want to write down the link, you can still write down the link to your chart. Okay, okay. Or and you can also write down the losses as well. You can write down the losses, what made you lose. Then for the profit, you can also write what made you win. What did you see that made you engage and then you won the trade? So that at the end of every month, you can be able to analyze every single one of them to find out, okay, this is what I did, and as I can see, this has been working for me. This is a mistake I made, and these mistakes I made them several times, and it caused me to lose money. So I need to avoid that. This is what the trading journal does for you. Then you can either you have it in hard copy by buying it from the market, buy a pen or pencil, whichever one you prefer, or you can download it from Google Play Store. There's one I use called Cashbook. This Cashbook helps you to record your profit and losses, date, time, image. It's all in there. All right, it helps you a lot. Okay, if you're good at Excel, you can use an Excel to create a journal or a spreadsheet where you can be writing down these things. Okay, so this is very important. Once again, don't forget to like this video. If you got a lot of benefits, please don't forget to like it and subscribe, hit the bell icon, share to your friends so that they will also benefit. Doing this will help me to grow, and also help YouTube algorithm to help users find my videos, which is going to help them become profitable traders. All right.